So hello everyone, this is Group 8 from Section 1 and we'll be talking about monetary policy of Chile. Before moving to Chile, we'll see what does monetary policy means. So monetary policy is the process by which a central bank of that country controls the money supply. So there is something called as a monetary policy rate, as we can see over here in this graph. The central bank fluctuates this rate if they find that there is some kind of inflation or anything else going. So in Chile, there is a central bank called Banco Central de Chile, and this is the one that is responsible for controlling this rate. Now, what is the objective of this monetary policy? Monetary policy ensures that there is a price stability. It also promotes the sustainable economic growth, ensures financial stability, and due to this, it safeguards people's income purchasing power. So further talking about the monetary policy of Chile, my colleagues will take it forward.
Yeah, I will be discussing on global economy. The global economy is weak, slow, and stagnant in 2023. The major factors to strain the global growth are Ukraine war, COVID-19 lockdowns, which have slowed down the world's economy and affected the global supply chain. The inflation and recession risks in the US and Europe, which have forced the central banks to raise the interest rates, which have put the pressure on emerging markets that borrow and trade in US dollars. The global inflation forecast is to decline to 6.5% in 2023 and 4.1% by 2024. But few countries like India and China have shown the positive impact on their economics. The global growth forecast to slow from 3.2% in 2022 and 2.7% in 2023. This is global economic condition. Now Jagdish will be continuing on the domestic economic of Chile.
Hi everyone. Coming to Chile's economy is expected to reach 450 billion in nominal GDP and 595 billion in GDP PPP by 2023. This meant it will continue to grow, establishing itself an investment pole in Latin America, especially in technology infrastructure and clean energy sectors. In terms of individual prosperity, GDP per capita is projected to be $17,827, indicating an improvement in living standards. The World Bank classifies Chile as a high income economy, reflecting its robust economic performance and development. Foreign direct investment in Chile is on rise, with the country receiving $17 billion and 12% increase from the previous year. This shows a positive outlook for foreign investors interested in Chile's dynamic business. Overall, Chile's economy is in a promising trajectory with a focus on technology and clean energy sectors, attracting significant forest investments and displaying prudent economic management. Next, Vibhuti will take over.
Hi everyone, let's have a look at Chile's economic growth. Due to withdrawal of pandemic-related supports, household consumption had reduced, which has eventually impacted growth. But there is an increase in government spending in social welfare programs and infrastructure-related projects, which has in turn increased the productivity. And the GDP growth rate is around 0.8% in the first quarter of 2023. Now, the rate of interest is quite high in Chile, and to curb that, the government has imposed higher interest rate. There are other measures which government is taking, but the inflation continues to be high at the rate of 11.25%. Now, my friend Gaurav will take over from here.
So, hello everyone. Committee has decided to increase the interest rates in order to curtail down the inflation rate, as the target inflation rate is 3% plus minus 1%. But still, the current inflation rate is way beyond that, and that we need to curtail it down. For that also, we are searching for the new partners, new destinations, more FDI in the country. We are actually agreed upon to raise the discount rate, which can increase the cost of borrowing for commercial banks. The government need to intervene in the foreign exchange market so that the national currency value can be improved. And for specific sectors, a target has been set that in particular sector, if GDP is if the sector is doing bad, then we'll have to inflow the cash. Then if we talk about the outcome of these steps, then due to increase in the interest rates, the spending power of the people, it has reduced. This actually has result in the this will result in the improvement of the inflation rate in the country, which eventually will improve the economic growth. The people's disposable income will increase because of less spending, which will improve the price stability in the market. The help in promote the sustainable economic growth, and a stable and resilient financial system will be established. This will help in increasing the people's income purchasing power. So this was from our side. We are section 1, group 8. Thank you, everyone.